K.R. Kamath, CMD at PNB, joins us now on the show. Mr. Kamath, hi, good morning. Firstly, what is your outlook on the overall asset quality, the trend in gross NPAs, slippages, as well as recoveries and restructured assets for PNB at this point?
See, there has been a stress on the asset quality because of, the stress what we have seen in various sectors in the economy. But I would like to clarify that it is very much within control and there is nothing to panic on this area.
Morning, Mr. Kamath. This is Nikunj Dalmi also joining in from the Mumbai studio. What is your outlook on liquidity as a banker? Do you expect Reserve Bank of India this time around to announce another CRR cut?
See, as of now, I feel that the liquidity has eased compared to the pressures what we have seen in the last quarter of March. And of course, the credit policy is going to decide on that. But the governor has more than once told that the RBI will take all steps to maintain liquidity within the tolerable limit of 1% plus or minus on the of the NDTL. And I'm sure that RBI will do this in maintaining the requisite amount of liquidity in the system. Coming to the expectations from the policy, it will be a difficult call for the governor to take because the inflation numbers have not subsided. To that extent, there may be a limitation in reducing the rates, but then the growth numbers, which have come down sharply, they indicate that there should be some reduction in the rate of interest. I'm sure that with a larger insight into the economy, the governor will be in a position to take a right call.
So, Mr. Kamath, what are your expectations for the full year for CRR as well as repo rates?
I think over the entire year there should be a repo cut which should range between 75 basis points to 1 percentage point at the minimum over a period of time, I'm saying. And of course the CRR cut can be a CRR cut by about 50 or 75 basis points, depending upon how things respond to the actions taken by the RBI.
So, Kamath, what are your expectations from the banking bill, the PFRDA bill and the insurance bill? All three bills are likely to be tabled in the current session of Parliament.
Yeah, I think once it is tabled and passed, I think there can be a lot of benefits to the entire financial sector, and then I think it may be a step forward in the reforms.
Mr. Kamath, what are your expectations on the banking industry in particular, your asset quality outlook, and which sectors do you think are going to outperform?
See, the point is that when the economy is under stress, definitely the asset quality will also be under stress. So because the economy is under pressure today, the asset quality, we have seen the pressures on the asset quality. And as we go along, if the expected rate cuts happen and the growth prospects step in, probably then I think the pressure on the asset quality will also come down.
Mr. Kamath, what is your outlook on the CASA growth for FY13?
See, point is that CASA will always be under stress when the differential between the savings interest and the term deposit interests are substantially high. That is why we have seen the movement of money from the savings account to the term deposit accounts. Now, if going ahead, if there's the rate cut coming and it impacts the deposit rates and the difference between the savings interest and the deposit rates narrow down, then probably one can look for increase in the share of CASA.